It has moved from a delegated proof of stake to just normal proof of stake, so I don't think you can delegate your Pulse anymore. But there are fees that are generated to the
Yeah,
validators. Yeah.
right. So, but is Pulse going to be a carbon copy of Ethereum?
I think that they did move to copying the ETH 2.0 framework. I know
Yeah.
that there are two devs working, one on the ETH 2.0 and I think one on the original Binance fork. So, but I'm not
So,
privy
so,
to
so
the
they're like
details
forked.
on that.
So they forked Binance Smart Chain.
Yeah, that was the original thing. So it's like they forked Binance
Okay.
that code, and then they were using the Ethereum system state to copy over onto it. And trying
Right.
to but they were adjusting it. They weren't just keeping it what Binance was. But
Because so for those who don't know, the way Binance Smart Chain is actually a very it's a mess, right? Because Binance Smart Chain actually has two chains. One of them is a copy of Ethereum, but Ethereum 1.0, and the other one is a copy of Cosmos. And they have some kind of magical, undocumented portal that sort of moves liquidity between the two. So Binance Smart Chain is kind of a mess. But I mean, ETH 2.0 is obviously a pretty technically accomplished work. The ETH devs really put a lot of effort into making it, pretty decent. I mean, with ETH 2.0, you can have 200,000 people staking, right? There's a lot of room in the ETH consensus for stakers. So I guess in theory, at some point in the future, you could stake Pulse Chain at home. But anyway, I mean, like, let's move away from the technical stuff. Is
yeah,
Richard Hart
I'm not a tech guy.
yeah, is Richard Hart at risk of being like arrested or something? Because that's the main reason I'm not investing. Is he going to get basically arrested for like some kind of securities fraud or something? I mean, that's the big kind of problem with it, right?
I would say no. I buy into the mainstream hex narratives of it not passing the Howey test, not being a security. So those arguments I pretty much support myself.
Okay, okay. I mean,
And then
Hex probably isn't a security
security, yeah,
because there's no. It's not because it's a pyramid scheme. A pyramid scheme can't be a security. Gold isn't a security, right? Bitcoin isn't a security. There's no business associated with Hex. It's literally just a commodity that you stake for a period of time, and when you unstake it and sell it, you're only getting money from from new people who are coming into the protocol. So obviously, it's not a security, but Pulse Chain probably is a security, right? Because you can collect fees, which means it's a business proposition, which means it does pass, it satisfies the Howey test. So Pulse Chain could get him for some kind of securities violation.
yeah. I guess that's possible. I'm not familiar with like SEC jurisdiction or like
Well,
exactly
is he in America? Is he in America?
I think
No, he's not.
generally he's not. Like he doesn't
not.
live in America, but I
No.
think he's an American citizen.
Okay.
Still.
He's a citizen, but he refuses to go there because of the SEC, as far as I
Okay.
have it.
Right. Okay. So obviously,
He was there not long ago. He visited his mom in Florida like a couple months ago.
Okay.
Okay.
Yeah.
Okay, fair.
So um
There's
so there
there's a
there
video of him. Sorry, go ahead.
so basically there is actually some kind of securities risk associated with Pulse Chain. But you see, the problem that I see for the regulators is if they say, look, we're going to say Ethereum isn't a security, but if you have the audacity to just copy ETH, then that's a security. I mean, that's kind of dumb, right? That's going to be very hard for them to support that line of argument. So if he literally just copies ETH, if they get him for securities, they probably have to get Vitalik as well, but they probably don't
Yeah,
want to do that. So
I'll give my
Yeah, but
opinion on this. Go ahead. Sorry.
ETH is decentralized. Sorry, mate. ETH is decentralized. Well, decentralized, whichever definition you want to use. Whereas Pulse Chain, from everything I've heard, is basically going to be validated by Richard. I mean, it's
but
not the same sort of
if he
setup.
copies the ETH technical side, then that would mean that anyone could become a Pulse Chain validator by staking their Pulse, right?
Well, then eventually, then it starts out as security and changes definition over time, wouldn't it?
Yeah, but I mean the same thing happened to ETH. ETH had a crowd sale. They sold their the ETH, right? And I mean if something's a security at point T in time, then 5 years later, how did it stop being a security, right?
No, that's a good question. But now the question is, if that statement's correct, wouldn't they be able to get him if they're looking for a reason to get him anyway, which they likely are? Wouldn't this be the time to do it?
Yeah, maybe. I mean,
Because
if
I
he's
hear what you're saying, but you can't say, okay, but it's maybe a security now, but we promise we won't be in a year.
I mean, that is one of the most ludicrous things I've ever heard. If you start as a security, you're a security, right? Because the whole
Well,
point of a security, is that it's a risky investment that people make in the hope of making money, right, in the future. So if it makes money in the future, or even if it doesn't, if they went into it with the expectation to make money, it's a security, right?
I realize the how we test and these sort of rules are
Yeah, it's
it's
kind of
difficult to
retarded.
apply
Right?
directly. It doesn't really work. But I'm just trying to see if from a view of investing in it and the risks associated with it, you have to look at it the way that the SEC might look at it and the actions they might take based on that interpretation. The fact that I don't agree with it doesn't mean that they don't agree with it.
Yeah. Anyway, I mean, it seems like there is some kind of risk here with Richard Hart promoting a security. And the thing with Hex that worries me, I guess, is that it really is still kind of centralized around him. Like, but the thing is, so is everything. Like, there is really only one crypto that's truly socially decentralized, and that's Bitcoin, right? Because nobody really fully runs Bitcoin. Whereas even ETH is like socially centralized around Vitalik and his gang. If anything ever happened to them, ETH would unironically probably just go to zero because somebody needs to run it. It's not finished yet. ETH won't be finished for at least another 5 to 10 years, and then maybe you can say it's truly decentralized. So I guess it's kind of all the same shit. I mean, the thing is, the more I look at the chart, the more I like it. Because like. Let me just pin this latest thing that I've charted to the mess, and you guys can take a look at it. So you have, when you look at it in dollar terms, right? There is a high in October 2020, another high in December 2020, another high in April 2021, and then it sort of really launches. And we're actually just coming into all of these highs right now. So technically you could say that this is an area of support. If it were to break below 0.86 cents, it would be horrible, right? It would be really horrible. So it's kind of like if you were ever going to buy the dip on this thing, just purely looking at it as a chart, not understanding any of the factors that are around it in terms of fundamentals, the region between 2.1 cents and 1.5 cents is probably where you would want to buy. Maybe it goes down a bit lower. Maybe we do see 1.5 cents tested. Wouldn't surprise me. I guess what I really worry about with Hex is just that it's this extremely volatile bet on Richard Hart personally doing the right thing. And that, like, maybe you buy a little bit, maybe you wait, like Harrison said, because of stock, because of what stocks are doing. But yeah, I mean, I think overall this conversation has made me slightly more bullish on Hex.
That's hilarious.
Maybe. Yeah, go ahead.
Kind of this is something that I've been thinking about more lately, about like the reasons why we would want to be investing in Hex now, not just for like, I heard you previously talking about using it as a means to increase your Bitcoin stack, which like obviously is like the main reasons why altcoins existed in the first place. But my thesis around investing into Hex has really come down to being able to have a significant percentage of the inflation of a ecosystem that is socially valued. I think just the basically fanaticism of the Hex community has showed that it has people behind it who value the token, independent of what an objective value may or may not be. But also at the same time, we're seeing things with Pulsechain being built who are forking existing DeFi protocols that exist on Ethereum now. So for example, like there's a fork of Aave and a fork of GMX. That's the famous and fiat protocols on. Those are the people who are forking it, and they're going to be supporting things like Hex, as well as some of the derivatives that I talk about on my channel. And so our ability to control the inflation of the system that is Hex, as well as its downstream derivatives, gives us the ability to participate in these fee-generating protocols and be a large percentage of the market makers of the system. And so while, Hex in of itself, you can extract value by taking the money that new people put in, using them as exit liquidity. But as the system matures and as the system complexifies with DeFi strategies, the inflation of Hex and its downstream derivatives becomes the keys to unlock block fee generation on other DeFi platforms. And in my opinion, that's the end game. Like, in my opinion, the people who really won in crypto are the ones who like held Bitcoin for so long that they can't actually exit via the market. But they are the people who are earning the fees on the centralized platform by making the market.
Yeah, I mean, the thing with DeFi on Hex is like, you know, DeFi is kind of like, you know, in a bad place on its hype cycle at the moment, because everyone was very bullish about DeFi over the past 2 to 3 years. But actually, it turns out DeFi isn't really very useful without oracles, right? And we don't really have oracles that work yet. So, and that's a really tough problem. So without these oracles, I can't really be bullish on DeFi, especially DeFi on alternate chains, right? Like, not only do you have the oracle problem, but you also have the trust problem inherent in these alt L1 chains. And that's another thing I don't get. Maybe some of the Hex people here can answer this for me. Why is Hex trying to build a separate chain rather than trying to build an Ethereum L2? I don't get that.
Nakamata, what do you think of the social currency aspect of Hex?
What do you? Well, hang on. Let me see if let me just come back to you, Kim. Maybe one, because we have Famous. I think is he Hexagon? Yeah, P is for Pulse. Maybe Famous can answer this. Why is Hex not trying to build an Ethereum L2?
Because, well, Hex doesn't have a team specifically, right? So there's no one that could do anything. The code is immutable. Nothing's being done to it since the day it's launched.
Okay.
But the thing is
that what about
we're just creating a thing called Pulse Chain. So
but Pulse Chain is not an L2,
no,
right?
It's an L1.
Pulse Chain's
it's an L1,
but it's an L1, right?
But I think that the question is really at the end of the day is like, well, what's happening with our L1? So if we look at the Ethereum W and Ethereum Fair, what they did, not what they are, what they did, right? So they system state copied the whole thing and gave everyone exactly what they had on the other side. That reduces the problems in which we've seen before in other EVM chain splits, such as Binance, such as AVAX, such as other things, where Phantom and so on and so forth, where you had to bridge in the asset in order to give value to the system. Now we have this certain, the coins are already on the other side. So there's no need to bridge over something to give it value. What you need to do is create ratios on the other side. And then you can have this sort of work in between, let's say as an example, Ethereum and Pulse Chain. Well, you could bring in assets either way. Usually we're used to taking what's valuable and bringing it to the other side to make the other side valuable. But now in this situation, which has never been done before, is what if you could take what's not valuable at first and bring it to where it's valuable and then pair it so it creates a value. And then there you have a ratio dependent on what is worth something. And then the whole ecosystem can generate a value due to certain ratios. So the oracles are necessary in order to literally talk to certain off-chain demands. But on-chain, the ratios are king, in my opinion. The oracles are not really needed.
Yeah, but that still doesn't answer my question of why Pulse Chain is its own L1 rather than L2. Because I think it makes more sense to be an L2, because if you're an L1, you have to rely on these bridges, right? And they're not secure. It's not possible to make a really cryptographic.
But that's where you're wrong. You don't have to rely on the bridges because everything's already on the other side. We're so used to having these bridges because there's nothing on the other side. Someone creates a brand new L1 with nothing there. And it's like, well, hey, bring your coins over so you could do something with it on the other side. That's nonsense, because then you're creating this whole, like you said, risk where bridges, like I agree, are one of the main causes for most of the hacks. And it doesn't create, it creates this like, oh, well, what happens to the funds if the people leave? But the thing is that with Pulse Chain and the way that certain things are being done now, where the system state gets copied fully, you have already your coins on the other side. It's not that they're not valuable. It's just that, okay, well, what's the ratio between this and that? Now you can bridge over certain coins, but you don't need to bridge over in a quantity to make it worth. You just have to bridge over some.
Yeah, right. I mean, you can do that, right? You can have a copy,
but you can't do that on AVAX, on Phantom, on the already existing chains. That's why people look at it like, it might not work. But when they understand that 100% of all the coins that already exist are going to be on the other side in the key holder's hands, right? So if you own the keys to that wallet that owns whatever, the Link or the Aave or the Ethereum even, because the Ethereum turns into Pulse, you actually have those keys on the other side.
Yeah. I mean, there are some problems with this. Like, ETH is not actually properly decentralized. It still has a huge reliance on centralized stablecoins like USDC. So most likely the USDC token that's over on the chain side is going to be it's probably not going to be worth literally zero, but it's going to be worth very close to zero because USDC will say we will not honor redemptions from Pulse Chain. Will only because otherwise, like, look,
I agree with you. I agree with you. But for
right,
me, the
I mean,
only
that's
important thing is that will the exchanges use Pulse, right? And I think they will.
Well,
I think the
mean,
exchanges will use Pulse because one, they'll have already someone with it, so they can make money. But the beauty, the beauty in it is that all exchanges, right? All exchanges own all your crypto. Anyone who has crypto on an exchange, they own it because they have the seed phrases to all the wallets like Binance. I know it's a real wallet, but they own the seed phrase to that. But the beauty is that they'll have already the coins to give you if you want to go on Pulse Chain. So there's no need for a bridge because the coins already exist in the hands of those that are producing it.
Right, but the problem is because Ethereum still has these centralized stable coins, you know, all of the other stuff is tied up to that, right? So if you have some kind of ecosystem on Ethereum like Uniswap or GMX or whatever, if it's touching USDC, then the version on Pulse Chain just isn't going to be the same because it's going to be touching a fake USDC that's actually worth zero. And you know, I mean, like this. I mean, I think there's something certainly interesting.
100%. The ratio will have a problem at the beginning, but people can't tell us that it's worthless because, well, what happened with ETH? People went in and out. Yes, there wasn't a high liquidity because not everyone used it. But if someone's going to tell us that it's going to be worthless, not really. Yeah, you're right. The USDC, the USDT, those coins are going to be whatever, but that's due to the ratio. Only simply due to the ratio. But if we fix that ratio, there could be a certain je ne sais pas quoi that will happen. It's never been done before, you know? So, like, people, you can't say it won't happen because this has never been done before.
Nobody is going to pay one real USDT for a fake USDT, right? Like, that's not going to happen.
We just find an infinite money glitch.
Yeah, right. Infinite money glitch.
But
clone each state.
Clone it 7 times. You got 7 times.
But you guys still haven't
guys, infinite money
consideration that
glitch
your
is
USDC coins, your stable coins are not that stable. Even on Ethereum, they're most of them
they're stable.
Most of them have problems with the way that they're back. You know.
Yeah. But okay, maybe you could say that for Tether, but you certainly couldn't say it for USDC or USDP. I mean, it's actually quite interesting. What would happen to Tether on Pulse Chain?
Well, I can actually say that because if you go look at the liquidity between USDT and USDC, it's not 1-for-1. There's still a percentage of one being worth more than the other. When I hold something, the USDC is not 1-to-1. It's a ratio. People still haven't understood.
The question is, where is it pegged?
No, but crypto is
and what does that mean?
I mean, look,
it's literally a ratio, and then the ratio when you trade in between it creates a different ratio. So the stable coins are not that stable.
Right.
But you can redeem.
I can redeem anything I want. I can redeem anything I want.
No, you can't.
I don't understand where
that
you
can't.
In. I could redeem my ETH. I could redeem my BNB. I could redeem my...
You can't.
You can't.
What do you mean? So you guys are saying I can't cash out any of my crypto? I can only cash out...
No. What I mean is you can take USDT to Tether and get $1 per Tether coin. You can get that. That's what I mean by redeeming. So if you had your Pulse Chain and you had 100...
You cannot, because if you go look at the ratio of how much USDT and USDC are worth, you're actually not getting 1-for-1. You're not. When you go trade it on an exchange and you say, okay, I want to take my USDT and put it in USD, right? If I go on my Binance and I say I want USDC and I want it in USD, I'm not going to get the same amount. Yeah. I'm going to get whatever the ratio is between them.
But that's on the local exchange.
Yeah, I don't care about one exchange. I'm talking about the biggest exchange in crypto, and that doesn't work like that because the coins are not actually $1. It's supposed
right, but famous. Let me just explain this for everyone's benefit. So basically, the way stablecoins like Tether and USDC work is the organizations that mint those are supposed to back them with real dollars in a bank account or US government bonds, treasuries, like T-bills, right? So if you have $1 million worth of the Tether token, you can take that Tether token to Tether, or if you have 1 million USDC tokens, you can take those tokens to Circle, and they will burn those tokens and deposit real dollars into your bank account. Now, if you do something like Pulse Chain, and you just copy the whole thing over, then you're not going to be able to redeem those centralized stablecoins with their issuers.
Exactly.
So they're going to trade for basically zero, right? Nobody's going to pay you for an unredeemable fake USDC, right? So it's going to trade at zero, or pretty close to zero, right? Now, I do think there's something interesting here, but I still don't think it quite. Well, maybe it does sort of answer my question, because maybe the plan with Pulse Chain is to sort of copy the value on Ethereum and then have a different ecosystem where all the same stuff exists and you don't have
We're
to
copying the
spend
ratios.
the
We're
money.
copying the ratios, and then there's also Trello, sorry. That's an oracle that is coming and working in with one of the, I don't know if Sloth mentioned that, but they're actually working with one of the stablecoin providers that are being created on that. But even at that, the way I look at it is like, how many people actually go and claim their USDC with USDC? With Century.
Right.
It doesn't work like
So
that. It's that
most people don't. Most people don't.
I would say
But you
99% of people don't.
Well, I think in fact with Tether you actually can't, because Tether will only allow certain approved organizations to do redemptions. But with other stablecoins like USDP, anyone can do it. So with USDP, you can create an account on Paxos, put in your bank details, and you can literally redeem your USDP and have the money go straight to your bank account.
But I don't think it's a one-to-one, though. I think it's really
It is a one-to-one. It is a one-to-one.
one-to-one.
With Paxos, with USDP, for one USDP token, you get $1 in your bank account.
Hey guys, could I just jump in real quick and try to?
Oh yeah, sure. Yeah.
Hey, so thank you. I appreciate the chat you guys are having today. I'm a Hexagon. I also sacrifice for Pulse, so just disclaimer there. But I want to try to address the reason why maybe Richard was wanted to do an L1 versus an L2, and the example he gives, or the justification he gives, is that when Ethereum had an option to reduce the S load or keep the S load constant, which is the read-write capabilities of the blockchain, it increased them, and so it made the ability for hexagons to end their stake in the future much more expensive. So in the last bull run, to end a stake that was maybe, like, let's say, a year old, could have cost you hundreds or thousands of dollars. And so that was a very big concern, because not a lot of people have that much money. And so if they, put in, a few grand, and, they earned a few grand, and then it was going to cost them $1,000 to end the stake, that's ridiculous. And so that was one of the reasons why he wanted to go with a fork of Ethereum, a full system state fork. The other example he gives, or other justification,
right, but hang on. If you had an Ethereum L2, you wouldn't have that problem, because Hex could run on the L2, and then it wouldn't be expensive. That's kind of the whole point of L2s, right?
I don't think you'd be able to port over the original smart contract on the L1 to an L2. I don't know if that's possible.
I think you can.
I'm pretty sure it is.
Yeah, I think you can. That's kind of the point of L2s, right? So you can have the Hex contract running on Ethereum, but you can then create a version of it on, say, you can create Pulse Chain as an L2, and you can have a version of the Hex contract.
Optimism didn't create that, so I don't think it would be possible, because you're basically taking a wrapped version of it to the other side. You're wrapping it, right? And L2 is wrapping it. Like, if you look at ZK Sync, it's like the ZK Sync mainnet. It's like you're giving them your L1 tokens, and they're issuing you these L2 tokens that are technically provided by that mainnet. So they're wrapped assets. So you wouldn't be able to recreate a coin that is not really the coin that interacts with the L1 contract.
I think you would, but this is kind of pushing my technical knowledge a bit. I'm going to have to look that one up. Humble D, you have a question.
I was just going to answer pretty much what 369 stated as far as why an L1 versus an L2. But I also want to, Richard is big on horizontal scaling. Part of what he says is that as Ethereum kind of clusters, they get very busy. The blocks fill up, it becomes more expensive. But when you scale horizontally, and I know that this has been done with other L1s, but what's fortunate about this community is that this L1 is a little bit different, since it's got over 200 contracts being built upon it for when it opens, which means it's not quite a ghost town when you've got stables and you've got like the GMX fork, the AVAX fork, the liquidity fork, all these forks, and it actually truly is an L1 horizontal scaling, meaning that it has everything that Ethereum has, but it also has it built personally just for the L1.
Okay. By the way,
anyways, I was
audio
just gonna repeat what 369 said, but he got to it before me. So thanks for having me.
Thanks, Humble. Your audio wasn't very good there, but I mean, the point is like you can already do scaling on Ethereum L2s, right? Arbitrum is really fast, right? If you go and use Arbitrum, the gas fees are very low. It's very quick. You're not going to have problems with S load and having to pay like $1,000 to unstake your hex. That's not going to be a problem on Ethereum L2s. And certainly it's not going to be a problem on if Pulse Chain actually became an ETH L2. That certainly wouldn't be a problem. So I'm not quite sure I understand. We have Hex Turtle. Go ahead, Hex Turtle.
Hey Nakamoto, how are you doing? I actually just a couple of clarifications. Is the statement a Ponzi and pyramid scheme just to get people in, or do you actually believe it's Ponzi?
It's not a Ponzi; it's a pyramid scheme, right? Hex
Okay,
itself is a pyramid scheme. Ponzi is just it's just a colloquialism. It's not really true.
Sure. So with with a pyramid scheme, do you want to classify what a pyramid scheme is, so that way I can kind of gauge a basis on what you believe a pyramid scheme is?
Well, let me put it like this, right? Hex is the same kind of thing as gold, right? As in, if you buy gold, right, somebody's selling it to you, and that person is taking profit on their gold, and then when you sell your gold for a profit, you're going to sell it to somebody else who's buying into gold, right? That's just what Hex is.
So, in this sense, a house is a pyramid scheme too. Is that correct?
A house is a little bit different because you can live in it. You can't live in gold.
Is Bitcoin also a pyramid scheme?
Yeah, in this sense, yeah, exactly. Bitcoin doesn't do anything, right? Litecoin, Bitcoin, gold, pearls, diamonds, all of this.
So
shit.
our hockey cards, our baseball
typically
cards also the same in the category? I just want to know.
Yeah, I suppose so. Because, well, the thing is, you could say you get use out of them, you get utility out of them. Like,
I don't know, but regardless, that's just assuming, right? But, just by your definition, would baseball cards or hockey cards or collectible memorabilia, would it be the same? Considered the same?
It's kind of the same thing because most people mostly people don't really pay to use them. You just sell them to somebody else for
fair
hire.
Fair enough. Okay, continue, Hex Turtle. I just wanted to make sure. That's it.
Yeah. Go ahead.
So, a pyramid scheme, by definition, you know those Cutco knives, the Cutco salesman? That's technically a pyramid scheme because there's a person at the top who starts getting other people in, and then those people get other people in, and those other people get other people in. And there's middlemen every single time between user, customer, and the product that they need. That's typically what a pyramid scheme is. I just wanted to clarify because a pyramid scheme has a specific set of qualifications to be considered a pyramid scheme.
Well, maybe instead of arguing about the definition of pyramid scheme, you just call it an unproductive asset, right? Because everyone's clear that gold, Bitcoin, pearls, diamonds, platinum, silver, all of these things are unproductive assets. Hex is an unproductive asset.
It's hard to say about gold because gold can be used for electronics.
Yeah. So you can, but like that portion of the gold price that comes from its use as a industrial material is extremely small, right?
It's not the price of it comes from people putting in the number.
That's what you're trying to say, right? It's not essential for needs.
Yeah,
I understand. That's fair.
Okay, so then whenever we look at Hex specifically or cryptocurrency, so the thing that typically these people are buying into is a notion, so something that they can do, or something that they can't do with fiat. So when you can program cryptocurrency to do something that fiat can't, that's where it derives its use case from. And I'd say, and I'd argue, that the reason why Hex is a productive asset is because no one does anything for you except for you. So Richard, he sits on his fat ass and does nothing but jerk off all day. Like, if we're going to be honest, he really doesn't do anything but sit around and do nothing. That's all he does. The community members, such as Famous, such as me, such as Crypto Sloth, we've all started to try to do something, whether it's community building, education, building websites, building front ends, developing. And so there are real world utilities that are coming out from this. So when we talk about value, I'd argue that people that are in collectible trading cards are not adding value to the world, but people who are in a cryptocurrency with no expectations are creating value to the world.
Yeah, I mean, that may be true, but Hex as an asset is an unproductive asset like gold, right? I mean, your gold sits in a gold.
But then we would have to categorize every cryptocurrency as being a Ponzi scheme. Correct?
No. I mean, it's not.
Can we give an example?
It's not a Ponzi scheme. Ponzi just.
Sorry, pyramid scheme. The way you said it. Sorry, pyramid. But then every crypto would be in that.
Well, no, because you have cryptos like maybe Pulse, where people are going to actually pay fees in Pulse, right? So Pulse would be a productive asset because if I buy Pulse right? People are going to be paying fees, and they're either going to be paying. So I could earn yield staking pulse in some kind of staking setup, and that wouldn't be inflationary staking because people would actually be paying money to do something, right? So pulse would be a productive asset. So like,
So would you consider SafeMoon a productive asset?
No, because you don't. There isn't a SafeMoon chain that you can use, right?
Well, but the argument that you made was that because there are fees that are being taken, those fees specifically, if we're talking about reflections,
because you have like the fee for buying and selling, but you see that's still is safe. Yeah, I mean, actually, in that sense, you could say it is because when you hold your
but that's a Ponzi scheme. That is specifically a Ponzi scheme because old holders. No, hold on a second. The old holders are paid from the new investors. That is specifically a Ponzi scheme. The Social Security network that we use is a Ponzi scheme. The retirement fund that they have in Germany is a Ponzi scheme. And Ponzi's fail when they can't pay out. So whenever we think that a Ponzi scheme specifically creates a market and value, you're deriving fees to value. So you value a Ponzi scheme more than you value Hex, which is not a Ponzi scheme, a pyramid scheme, a scam, or an MLM.
Well, I would say it's better to say Hex is an unproductive asset. I think you could argue that something like SafeMoon that has a reflection fee.
But what do you mean by unproductive? What do you mean by unproductive? Because there is utility in these coins. When you go on Etherscan.io, you look at the contract, there's utility.
But there's no utility in Hex.
There is. There is. When you go look at the contract, when people say they're
you buy it and hold it.
No,
right?
Absolutely not. As an ERC20, there is more than just that. If you go look at the contract, right? If you go look at the contract, well, that's not. No coin.
But let me just famous. Let me just make something clear. Calling something an unproductive asset isn't like a diss.
No, I understand,
right? But I'm not dissing it. I'm just saying what kind of thing is it, right? So Ethereum and Bitcoin are two prime examples. Ethereum is a productive asset because people pay fees, right? Bitcoin is not really a productive asset. Well, it certainly isn't if you're a holder, right? Because people do not pay fees to Bitcoin holders, right? Now, they do pay fees to miners, but that's not for holding the asset. That's not for holding Bitcoin, right? You have to be a miner to collect those fees. Whereas you just hold Bitcoin, you don't get anything. It's just a buy and hold. It's like a block of gold that you put in a bank vault. Hex is a block of gold that you put in a bank vault.
Absolutely
right?
not. Because if you go look at the contract on Etherscan.io, there's a contract button. And in those contracts, there's functions, which is basically the utility. If you want to talk about being unproductive, BNB as an ERC20 is unproductive.
Right.
Matic as an ERC20 is unproductive. AVAC, 100%. Go. You can't do anything with the ERC20 versions of these coins. Well, you can't. There's nothing to do on chain with them.
Okay, I think you're really kind of misunderstanding this.
I think your verbiage is just not the proper verbiage for this stuff.
Well, no, my verbiage is correct. A productive asset is one
that does something
where you're investing in something like a business, right? You're providing some service to somebody that they are paying money for, and you're collecting those fees, right? So, for example, Pulsechain or Ethereum. Those are productive assets. BNB is a productive asset because people have to pay fees in BNB
on the Binance Smart Chain, but BNB as an ERC20 has no productivity, has no utility on chain on Ethereum.
Well, there may be a wrapped version of it on Ethereum, but that's not what I'm talking about. I'm talking about
but it came out as an ERC20.
The original version of BNB, the one that was used to fork the BEP20, because that's how it works. There's ERC20 versions of all these coins. Now, these coins are, like you said, unproductive. Why? Well, because when you go look at the contract, they have no functions. They only have the send, receive, approve functions.
Right, but they're productive elsewhere.
Hex has to interact without approval with the contract, and you're able to do something with it without.
Well, what are you able to do? What are you able to do with it?
You're able to claim some of the inflation that occurs every day.
Okay.
But that's productive.
So it is. No, it's not. It's unproductive.
Well, no, I'm sorry.
Real quick,
it is productive because the coin self-inflates itself every day. In order to not get diluted, right? Like the way you're saying with Ethereum, in order to receive something, you need to do something, and you need to interact with the utility that is offered by the contract. Now, when we go look at Matic as an ERC20, there's no use cases. When you go look at all these coins, USDC, what use case does USDC have as on chain?
USDC is an unproductive asset. You don't get anything. You're not buying into a business when you buy USDC.
But in Hex, you are, my friend. When you buy Hex, right? When you go and acquire Hex, you have the right on the blockchain, if there is a contract that has been deployed, that in order deploys you your coins that are Hex, that ends in 3.9, you have a contract where you can do something without having anyone tell you either way. You don't need a DApp. You don't need anything.
Yeah, but it's not like a business that people.
It is a
use,
business,
right?
no, but it is a business. That's what you have to I'm trying to explain that there is productiveness in it.
Famous, dude.
Who's the CEO of this business?
I think
why
famous.
Why do you need a CEO of a business?
That doesn't matter, right? I think
way.
famous is I think famous is just confused about this, right? Like, and I don't want to bore everyone with this, so let's just change the topic. Hex not a productive asset. Pulse is a productive asset under the definitions that we're using. I don't want to just bore everyone with this shit. So, I want to go back to the topic of L1 versus L2. I still don't quite understand this though. Like, why wouldn't it make sense for Pulse chain to be an L2?
Because then you work
So
off
at
of,
least it being
because
a
then you work,
L1.
then you work off of Ethereum, and you're as centralized as the coins that you're utilizing. You're just taking a centralized asset and going into the bathroom with it and doing something with it and then opening the bathroom.
So hang on. You're saying that the reason Hex doesn't want to be an Ethereum L2 is because Ethereum's too centralized.
In my opinion, yeah.
That is the craziest thing I've ever heard. Any other hexagons want to answer that one?
Okay.
So we have Matic as an L2 already, and Hex exists on the Matic smart chain already. And you've already said that the ERC20 Matic is not a productive asset, whereas the L2 itself is a productive asset. You did by saying that.
If
I'm going to clarify how I heard that, so that way you can combat that. So because I heard that from how you said it, the ERC20 doesn't do anything, but the L2 Matic that you use, that you have to pay Matic for, you have to transact on Matic using Matic.
Yes.
You don't use ERC20 Matic for anything.
Right, but ERC20 Matic and Matic are the same asset, even though they're different smart contracts.
So Ethereum is ERC20 Pulse, and Pulse is PRC20 Ethereum. Whenever you go to L1,
that's not true.
Yes, well, hold on. I will just explain this for you. Because whenever we are forking Ethereum, we're taking a system state copy. Absolutely everything that exists on the Ethereum blockchain is going to be duplicated over. And so all the Ethereum will be Pulse. Now, you can bridge your Ethereum over, and then you'll have wrapped Ethereum PRC20. And whenever you want to bridge your Pulse back over, you will have wrapped Pulse ERC20.
Yeah, right. But I think I see the problem here. Like, when I say, Matic and ERC20 Matic are the same asset, they're the same asset because they're economically interchangeable, right? As in, like, the market has decided that their prices are pinned to each other. It's not a technical thing about blockchain. It's a thing about the market, right? And there is like some contract. There's a bridging contract. Matic's not an L2, by the way. It's weird, right? It's not an L2 though, at least not right now. There is some bridging contract, and basically the market has decided to trust this bridging contract and believe that every ERC20 Matic is backed by a real Matic on Matic. So, like, if you just take a copy of the ETH blockchain, right, you don't have ETH in your copy. You have like fake ETH, right? You have like ETH PO or cheap ETH or any of the other copies. The market doesn't treat them as economically equivalent, so they're not the same asset. So I guess what I'm saying is where the two things are the same asset is an economic fact. It's not a cryptography fact.
Correct. And so also, when you said that Matic isn't an L2, Matic specifically calls themselves an L2, so are they deceiving people?
They're lying. They're lying, yes.
Okay,
Absolutely.
So deception. Okay.
But I don't know whether they actually say this, right? They certainly imply it in order to pump their price.
They say it whenever they say Matic is a layer 2 solution for Ethereum scaling.
It's a layer 2 solution. It's a layer 2 solution. It's not a layer 2.
So it's a verbiage. Right? Okay.
Guys.
So in this sense, Pulse Chain is specifically trying to be an L1. Why? Because it's easier to just do it that way. That's how I'm interpreting it from the reason why our devs are forking it over. You could lie and say that it's a layer 2 solution as well, or you can just say it's a layer 1 because it is just taking the entire system state copy and bringing everything over, so that way everything that operates on Ethereum operates just the same on Pulse Chain. So instead of deceiving your customers by saying it's a layer 2 solution, which makes people believe it's a layer 2, you just go straight up honest. It's a layer 1. We're forking everything over, and then it's honest.
Right. Yeah, I mean the difference, the fundamental advantage of an L2 compared to an alt L1 is you inherit the security from the L1. Ethereum has a very high degree of economic security, right? You have to spend, like $50 billion or $30 billion or something to do something naughty on Ethereum, right? Because it's protected by a huge amount of staked ETH. Whereas Pulse Chain is probably not going to have the same degree of economic security, and it's probably,
It doesn't make sense
probably
because
going
it's
to be
only the
quite
coin.
centralized.
It's only the coin that's allowing the staking. So same in Pulse, you would be able to provide enough coin at a percentage of the supply in order to provide a certain sort of staking mechanism or validity within the network. It has nothing to do with the 30, 40 billion dollars. The $40 billion only exists when you get out of Ethereum, not when you're in it. When you're in it, yeah, okay, you
Well,
could
but
say
if you
it's
want,
worth
right,
this
but if you,
much because
yeah,
of ratios, but the ratios have
but
nothing to value has nothing to do with it on chain. So when you're talking
well,
about
but the thing
staking
is, if I want, right, but if I want to attack, let's say I make a copy of ETH and I call it Naka
yeah,
ETH, right? That's my copy of ETH,
yeah.
right? And I copy everything, and obviously, the centralized stable coins, they're all going to go to zero on Naka ETH because they're not going to be redeemable, right? But everything else is still going to work the same. Well, that Naka ETH chain is not going to be as economically secure as real ETH because somebody could come along and buy up
How?
67% of the Naka
Explain
ETH
to me how
because they could
someone.
buy it
How?
from me,
No,
right?
but that doesn't make sense. You're not making sense, bro. You cannot buy up 67% of a coin if the liquidity only can have 10% of it in it, right? Ethereum. The reason why
Yeah,
you
right.
cannot overpower Ethereum is because when it's wrappable asset, which is used in liquidity providing, aka wrapped ETH, has only been provided, and you could see as the number one holder, it's 13%. So no matter how much you're gonna willing to buy, no matter how much money you have in the world,
Well,
you're never gonna buy out
they
all the
don't
Ethereum, and you're never gonna
famous
control the
they
network.
don't necessarily have to buy it on chain, right? They can they
No, I'm
can
sorry.
buy
They
it
need
off
to
chain,
buy it on
right?
chain
They
in
can.
order to.
No, they don't.
Okay, explain to me
No, they
how
don't.
someone can control the
No,
chain
they
without
don't.
having it on chain.
I can just go to a guy and say, look, I want to sell you a whole bunch of Naka ETH. I will just give you my hardware wallet, and you will give me the cash, right? And then that guy has
Yeah, but that
control,
means that you
right?
had to have minted yourself the coins, which is not. It's not real. So, like, let's say Pulse Chain, right? There's gonna be so much Pulse created, and then everyone else has it. So it's like, well, yeah, I'll
Yeah.
come
So
in with so
right. So
much money and
everyone,
I'm gonna buy
right?
it all. Do you understand
Yeah.
slippage? Do you understand liquidity
Right.
pools? Do you understand how much?
Right, but there's going to be a bunch of people who are going to everyone who holds ETH is going to hold Pulse, right? Because that's the way it works. That's when you make a copy and all the public keys are the same. It's going to be all the same holders.
Yeah,
But
but they're
what's going to
getting
happen?
diluted 10,000 to 1. But even if they weren't getting diluted,
Right.
it doesn't matter. Whatever's in the liquidity pool is what they can trade. If not, they got to go see someone and say, hey, can I have your ETH?
Right. So
So there's no way they can do a 60
when
something percent, nor on the real one, nor on ours in Pulse Chain, because then that means everyone would have to go and say, okay, let's all come together and let's take 60% of the coins, which doesn't even exist in ETH.
Right, but it's if you're an outsider looking in on a system, right, and you see a token, let's say again, I make a copy. Forget Pulse Chain. I make a copy called Naka ETH.
Yeah.
Right, and the value of Naka ETH does not trade the same as real ETH.
I understand,
right? It
but
trades
that's
at
because of a ratio.
1 cent or something. Yeah, because the ratio is shit. It trades at like 1 cent or 2 cents or whatever. And then a bunch of people hold this, like a bunch of people hold ETH PO, right? But then they're all like, fuck it, we're just going to dump out ETH PO. We don't like it. We're going to sell it. Right. And then eventually that ETH PO would end up, the ETH PO that's actually going to matter ends up in a small group of hands. Because here's the thing, right? If you're going to have a proof of stake blockchain, right, the security is going to come from people who stake. So if you have a bunch of people who just ignore it, right, they're not going to be stakers. So what really matters for the security of your copy of ETH is how much money is there, how much real value is there in the set of people who are actually active using it and are prepared to stake, right? So if I made Naka ETH, it's an exact copy of real ETH. The token trades at 1 cent because nobody trusts me. Everyone's like, this is just a rug pull. It's just not going to go anywhere, right? Maybe there are still some people who are Ethereum whales who would still dump their Naka ETH, on an exchange if there was one and withdraw the money. And so eventually a few people will end up with all of the liquid Naka ETH, right? And it'll be worth a very small amount of money. And so the economic security of that Naka ETH chain would be low because somebody could just come and, buy that up somehow. It doesn't have to be done on chain. It can be, once it's been concentrated, once the active supply has been concentrated into a few hands, it can be bought up. So, if you copy ETH, you do not have the same economic security as ETH has, right? You have less. Now,
No, but you're doing
I
a
don't
system state copy. All holders hold the
Sure.
amount. So what you're
Yes.
saying would only apply
Yes.
to those that don't do a system state copy.
Yeah. Well, no. Even if you do a system state copy, the people who are actually active, because some people who hold ETH, they're just not going to know about Pulse Chain, right? So they're not going to do anything.
Yeah.
So that means they're not going to stake their Pulse.
Wait, hold on, guys. They're diluting all the ETH holders a million X, so they don't
Yeah.
even
So
count.
explain to me what this dilution is and who's actually going to hold most of the Pulse, because this really seems to be kind of important here.
Whoever sacrificed and was a part of the hat sacrifice set for the last over the last year, people had been talking about, if you send your coins with no expectations to a particular wallet, then you will be credited this particular amount of coins. So, for example, last year, around when every coin was about 80% higher, anyone could have sent their Luna, UST, USDC, Bitcoin, Ethereum, anything in, and then they would have been credited on the blockchain a one to blank amount that they would be able to get this pulse.
Okay, right. So basically, you have to. So the people who are going to hold the Pulse are going to be basically hexagons. It's going to be people who sacrifice.
Well, plenty of people outside of Hex did
What happened
that.
with ETH at the beginning? I remember trading my Bitcoin for
Yeah.
so much ETH.
Yeah.
Did you know that someone had about 40% of the ETH at the beginning?
Yeah, I mean, let's not go into criticizing ETH.
I'm not.
Here
I'm just saying our ideas are not making sense.
Yeah, right. But so I just want to be clear about what's actually happening, right? So the people who are going to hold the Pulse, right, are going to basically be the hexagons, people who did the SAC thing, right? So they're going to have the supply, and the market value of Pulse. Now, what do we think the market value of Pulse is going to be, Harrison? What do you think it's actually going to stand for?
If any of us said a price, we're all honestly going to be lying to you. No one would know the price.
Well, Harrison, what do you think it's going to be?
I don't think he can comment, because we have to pair and we have to create value. You have to create a ratio between Pulse and Ethereum. It doesn't exist yet, so it'll be whatever it is. It could be 20
what do
times
you
the
think
price.
it's going to be? What do you think it's going to? I don't think so. What do you think it's going to be, though?
So based on the community size and the fact that Richard owns a little bit more Pulse, it probably will be on par with the Hex market cap if you could just subtract Richard's coins, just to make it like 1-to-1.
So
Probably
what would the Hex market cap be if you subtract Richard's coins? About 1.3 billion or something?
Hey guys,
let's look on Etherscan.
I would love to hear this, guys. Can I know exactly what it would be without Richard's coins? Because we haven't even found Richard's coins, but somehow you guys did. So can we please hear
the Nomics market cap?
Nomics, yeah.
Richard's
Nomics,
coins.
okay, cool. Better than Coin Market Cap, but Nomics, okay, go. I would have. I was expecting Etherscan, but okay.
Richard's coins,
yeah.
And if you look at that right now, it's got 2.6 billion.
Cool. So that's false, because if you go on Etherscan.io, the Pulsex sacrifice wallet has 42% of it, and the second one has a certain amount. And then if you go look at the top 100 and 500 coins, we're at a certain disadvantage than other coins, meaning that we have less concentration than most of the big coins. So I don't understand why we have to discredit Richard's coins when it doesn't make a difference whether Richard has coins or not. I don't understand the point of this. We didn't discredit any of the Litecoin founders' coins, nor did we discredit any of the Vitalik's coins, nor did we discredit, who can we name? CZ's coins.
Okay, but let's just I don't want to go into a huge philosophical debate on this. I just want a rough guess of what we think Pulse is actually going to trade at. So if we take like a 1 to $2 billion market cap for Hex, excluding the Richard Hart stuff, and we say that's going to be roughly what the Pulse market cap is, that would be.
See, you're basing it on market cap, and market cap is a terrible way to judge it, because all market cap is a price of circulating supply times the price.
Yeah.
Whereas when you look at Bitcoin, they don't take out Satoshi's circulating supply because it hasn't even moved, and that is the definition of circulating supply. And when market cap can be changed daily just because of the price, it's kind of a weird misnomer to use. So if you want to use actual real numbers, an actual real number would be that someone sacrificed $1 billion to the Pulse Chain sacrifice, and then to the Pulsex sacrifice, about $1 billion at the end was also put in there. So we had about $2 to $3 billion between both of our sacrifice sets for Pulse Chain and Pulsex. Okay. So yeah, let's start with that.
So I mean, if we go with $2-3 million, that would mean that the Pulse token would trade at about like $20 or something.